Hello, it's Tuesday the 17th, I'm FxPlew and this is the market brief, and I'll start with a friendly reminder. -5 is pretty damn chilly. Now, I mentioned yesterday that the UK may have had a stay of execution over when the economy falls into a technical recession. That's because in order for a recession to have begun in Q4, December activity would have had to virtually collapse. And despite all the disruptive industrial action, that looks pretty unlikely. As such, the World Cup effect may well have deferred recession by another 3 months, but you mark my words about that recession, it's coming home. Regardless of the recession risk, the inflation data, which is due out tomorrow, is not expected to have a real effect on the MPC policy, and another 50 basis points is widely priced in for when they meet on February the 2nd. Meanwhile, US inflation data seems to have had a more significant effect on the market. There is growing speculation that the Fed may begin tapering rate hikes at the next meeting on February 1st. If not February, then the following meeting for sure. But we can all play that game of speculation, because if not the following meeting, then definitely the one after that. Check me out, speculating live and all that. But anyway, despite that fun stuff, there's no real indication that the Fed members feel the same way as the market, or that they will vote accordingly. Yes, inflation may have peaked in the US, but we're still comfortably over the 10% mark, and that's still a very long way away from their 2% target. And Fed members are reluctant to suggest that they're out of the woods yet. Current forecasts are therefore leaning towards another 50 basis points as a rate hike when they meet early next month. In the market, the fate of the dollar is very firmly linked to the Fed's monetary policy at the moment. While inflation is falling and the Fed looks likely to taper rate hikes, more likely to taper rate hikes than increase them, this does rather limit the upside potential for the dollar. Indeed, if the Fed were to turn dovish and start tapering sooner than expected, that could see the dollar index sell off from the current levels of about 102.50 and perhaps test the 100 levels again for the first time in a long time. The UK rate expectations are providing a bit of support for sterling. We closed around 121.95 against the dollar yesterday. We opened this morning about 121.70 against the dollar, about 112.55 against the euro. And euro dollar is about 108.15 on this chilly morning. So I'm going to dash off now, go and get a cup of tea and warm up. Toodaloo.
If you do not have a clue, then just tweet through and ask FxPlew.